morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thank you for visiting the lab today. I stream live Monday through Friday, starting at 11:30 Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. As well as a library of webinars, so you could see this process over many different market conditions. And some of these narrations, which are real-time market narrations, are up to almost 5 hours long in rather active markets. So you can see a process that is anchored. And while everything, of course, is random in the sense of an outcome of any specific interaction with market participants, I think you might find that over time, the Trader Lab might give you some support in order to understand the business of trading. And also for career-minded traders, it might be a place where you can progress towards your goals if you're interested in establishing a trading business for yourself. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. Also, if you are a current Bookmap subscriber, please be sure to confirm and verify match up your subscription email with your Discord email. This will give you access to additional benefits in the Bookmap Discord server, including special webinars and other things of that nature, and you don't want to miss out on those. But you must verify in order to take advantage of that. And that link and information is in the Bookmap Discord Trader Lab community. So let's get started. I'm just going to show you what this looks like. And this is in the Discord. Be sure to verify. There's going to be, if you are a subscriber, you'll get the opportunity to unlock free add-ons, early beta access to developing add-ons that we're always working on, and exclusive webinars. Be sure to do this. Do not delay. You do not want to miss out on opportunities to advance your understanding, and also if you're a subscriber, to get access to special education that's just for you. So, and that is available in Discord. And if you're visiting us on YouTube, I invite you to use the link in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab. All of these services are currently available at no cost. And like everything in life, it's free as good, as they say, and there is no cost involved. But you do need to take some action so we can confirm that you're not a spammer. And also, if you have a subscription, that you don't miss out on special opportunities and education that is exclusive for subscribers. This is the RTH Open. I'm going to give you a couple levels. I'm not going to spend a lot of time today. If you've been following this stream, or you go, if you're in the Bookmap Discord Trader Lab, there's a library of webinars and 60 PDFs of the structured trades. I do the same thing every day. Something needs to be anchored. If the market is random, something's got to be consistent. You cannot measure inconsistency. The market is random, it is inconsistent. How do you measure inconsistency? One of those pieces needs to be anchored. Casinos only play games that are anchored. In other words, exactly the same way, no variables. You can't measure something that's variable going in and variable coming out. Old saying in computer world, garbage in, garbage out. Just saying. So these are potential targets. I will not give you the statistics for them. They are available in the Bookmap Discord Trader Lab community. Let me make sure I've got a level in here that might be missing. 1 second, guys. Nope, not missing. Okay, so yesterday's low, ETH low. High probability we will take out either the ETH high or low, over 90%. Again, I'm not going to get into the specifics too much. This is a microcomposite high volume node or a variable high volume node. It was where the highest volume was in an intermediate time frame. I cannot go into all these explanations like I typically do. I've been doing it for a number of years, so you guys can just watch previous webinars. This is the ETH volume point of control. Let me explain what a volume point of control is. It's where the high volume is, and it's called a point of control. Think of it like shopping, so it's a retail price. In other words, buyers and sellers come together, they do most of their volume in one place, they go, hey, we like this. And it becomes an area of agreement. Now, the thing that's interesting about this is the highest volume in the ETH or retail price was right at yesterday's low. And then, and what you need to know before that happened was that this was lower. So the perception of value was moving higher. Now, this is not accurate over here. It's only accurate starting here, and this is accurate. Now, this is the ETH mid, high probability. This 3750 is an important target, a target coming up. And this is a target value area high and low volume node. These are all targets, and these are posted in Trader Lab, or some of them are posted. And if you're in Trader Lab, you have all the statistics. Why are statistics important? Because everything we can do to extract an edge in a random environment puts more of the odds on our side. And the outcome of any individual trade, of course, is random. But if we can gauge the direction of the market based on locations and understanding of market behaviors, we might, underline, at times, be able to get in alignment with it. So what do we have? High probability ETH low or high probability ETH high. We have overnight mid. I think it's about a 72% probability, neither here nor there. This has about an 82% probability. I can't help myself. And the low has over ETH high or low. I think it's about a 95-ish% probability. I'm making those numbers up in the sense I'm not quoting a specific number. They are ballpark, but you can download a stat sheet and then you need to vet it for yourself. Okay, RTH open. Here I go. Now, grab a pen and paper, take notes, think about what you do when you trade, and think about what structured trading might mean. What is structured trading? The auction, using a volume profile as a chassis, and order flow. I don't use indicators. I use order flow. Why? Because it's the truth of the market, and it's happening in real time. Now, I can't predict anything. Can you? Well, you know what? I started out in this business thinking it was measured moves and prediction. It took me just a number of years, too many, to find out that it had nothing to do with what I thought would happen, because all the inputs that come into the market change the perception of value. And the perception of value, if we think about this as an auction, it's to find out what's too high, what's too low, and what's fair. And it does it in all fractals and time frames. So let's look at this. RTH open. What is a green bubble? Delta. What makes up delta? And you'll see how this is all important. Buyers and buy stops become market orders. They are aggressors. All market orders are measured as delta or aggressor. Okay? The other side of it is there's a passive side. We can't see them. We can see the outcome of their interaction, but we cannot see them. That's the limit order book, and they are passive. So a limit order does not become a market order. It is a limit. So the aggressors have to lift to get that limit order executed. So aggressor stops. You'll notice we have now there's buyers and sellers. These are filtered. I only want to see the higher volume. Like you see down here, the volume, I want to see that. So I'm seeing it here. When there's less volume down here, not important to me. I want to see the important volumes. Up here, what do I see? I come up, I see only 7 stops. 22, 7. That is stop divergence. That's the only thing I use from indicator experience. Divergence. Because higher with less of something gives me information. Now, from the volume profile point of view, this yellow line is called a developing volume point of control. A developing volume point of control, which starts at 0 at RTH open, is really giving us a sense of where the volume is. Now you can see we left this, so there's no real volume here. This is where the volume is coming in. This is a consolidation, the chop chop. So now the yellow line moves up. So what's going to happen is, as we move around, wherever the highest developing volume is in the developing daily time frame, this is going to go there. In the fractals, and let's call this little consolidation all on its own. Now we're just talking about this little thing is a consolidation. I'm not paying that. Yeah, but it's on sale. Yeah, I don't know. Yeah, but it's a deal. And inside of this is the retail price in this store. Think of consolidations like stores. It's very simple. So in the supermarket or higher time frame, larger store, you've got developing. That's the yellow line. In the fractals, which are exactly the same thing, but in a micro structure, the chop, 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 you've got the same thing. So let's go from there. I hope that makes sense, guys. Let me know if that's making some sense. So, volume, stop divergence. What's happening? Don't know. What was too low? Right here. Too low, too high. Developing daily time frame. Microstructure, retail. If I break away, potentially too high. I'm not paying that. Let's leave the store. More volume now here. The volume point of control drops down. We have our micro high volume structure there. I'm going to label it. I call it a variable high volume node. That's what I call them. I made it up. What do I know? When I started doing this, which is a long time ago in a galaxy far away, I started trading in 1980, so, you know, long time ago. I had to make up all this stuff. I learned market profile in the mid-1980s, and I was clueless. Now, break low. Notice where we come. Right here. Also, what's right here? The opening swing low, right here, right there. Label that. Opening. What's at the opening swing low? If I have buyers here and exhaustion, and if there were buyers, and who knows, you know, long and stops, then there's going to be stops under this rotation. So I know that. You know it too if you've been trading. So what happens here? VPOC migration. Stops under here. Follow it. This is a rotation. Stops are at opposite sides, and there's going to be stops up here. Opening swing high. Don't forget that. Where do we come? Back here. What is this? What happened here? I'm not paying that. Get out of here. Isn't that what they're saying? Let's watch. What is this? How about a short in the Trader Lab? Here, here, stops up here. VPOC migration. What is this? Does this look familiar? VPOC migration. Short. Pull back the VWAP. Short. VPOC migration. VWAP. Short. And where are we going? Overnight volume point of control. Yesterday's low. And the bonus round. Watch. What is this? Another short. Holding. Watch. Back to mid. Where's our target? Here. These are Trader Lab structured trades. Short. Short. All those are entries. Up to you. Not my job. Your job. Target. Here. Finito. Everybody good with the short. This is called a structured trade. It's in the 60 PDFs you can download in the Bookmap Discord Trader Lab community. Any questions, guys? Post them. Hope you're getting something out of this. Welcome to YouTube, by the way. If if you're visiting, appreciate you stopping by to Trader Lab today. Thanks, Steve. Please give a thumb up if you're visiting in YouTube. Also, if you're a Bookmap subscriber, you do need to verify your Bookmap subscription in alignment with your, they don't have to be the same, but with your Discord. If you are a part of Trader Lab or part of the Bookmap community in Discord, you need to do that immediately so you can attend special webinars that are going to be coming along for Bookmap subscribers. Otherwise, you will not be able to have access, so do it now. Also, if you're in YouTube and you want to visit the Bookmap Discord Trader Lab, use the link in the bottom, and you're all welcome to visit that. There is no cost. So this is the first trade. This is a nice way to start the day. What do you guys think? Remember where the short was? Here, 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 here. I'm not going to go into the microstructure either. I do all of this all the time. I'm just giving you a broad stroke today. Now, I am going to take you someplace else. This is the short, okay? And these are statistical targets, which I have alluded to and have given you all these statistics. And they're in the library in the Bookmap Discord Trader Lab community. They're also out in my previous webinars that are out here floating in the ether. This is let's track this over here. Too high is there. This is called VPOC migration. I'm just going to catch up and do these. I might do a little bit more on the trade management process, but that is so individualized because each trader determines their time frame that they operate in. Or I call them fractals because they're not based on time. But same difference, just a little different. This is too high, right? Now, what happens here? There's more volume here than there is up there. Now, I'm going down to my target. I don't think there is any targeting down below. Well, but this is the primary target. And why might I think that? Well, if I get under yesterday's low, what I know is there's going to be potentially stops here, and this has a high probability. So if I'm coming in, this is the retail price. So when I open, which I think is there, I have a high probability of coming back here, taking the stops out under yesterday's low. This is the logic of all this. And then this. And then again, it's all random. So this is a nice trade. This is a nice way to start the day. This is Trader Lab. Now, let's talk about two things here. This I will spend some time with. Let's assume you have no idea that this is a high probability statistical target and that Trader Lab structured trade is exit here. Now, I don't know about you. Now let's assume you don't, you're just hanging out. For me, I trade the target. So when I get here, the trade is over. And if it goes to zero from here, I'll have other structured ways to get into the trade for continuation if I have a reason. Right now, this is the trade out here. And by the way, I don't get out here. I give it 2 ticks. Very generous with that. But let's look at this. And this is just what you call a pause for station identification. So chop, chop, chop. If this is a consolidation, let's look at it. And this is just what we call a sidebar, Isn't this where the lawyer, goes and talks to the judge, come over here. And so this is a consolidation. We break low. The sellers are still in control. We pull back. In fact, let me explain what's going on here. Sellers are here. Buyers absorb them. When you see the delta and you see the buy icebergs. There's sell stops. This is a stop and iceberg detector. Very cool. What happened? Why didn't we go down if we see delta? This is the aggressors. The stops, remember, are part of the delta. Come back, come down. Sellers again. Who's buying? Icebergs, icebergs. Sellers are here. You got your buyers up here, selling iceberg. So you see the confluence of structure and tools. Very important. Oh, I got a green bubble. What is a green bubble? Delta. Does it mean get long? No. It's what happens. So I come up here. I have an aggressor, but they're absorbed. These guys, you see it? I have an aggressor. They're absorbed. It's these guys. I have buyer. Where am I going here? Why am I not getting over this seller here? Because the sellers are here. And why is these guys not getting lower? Because the buyers are here. Sellers, buyers, sellers. Now the buyers get popped. Now, does this mean get short? Well, I'm at a target. So I just sit here and I'm a deer in the headlights. I don't have a trade. But here, watch. So this is a consolidation. You can see it, right? And inside of this rotational trade, which is all a consolidation is, there's high volume. That's like our retail price. If it's too high at the moment, we leave the store and we go to the next store and we start the shopping experience again. What is the shopping experience? Sellers. Okay. There's pain for these guys. Buy stops are up here. Sellers. Sell stops. That's these guys probably coming out. Who knows? I have nothing to do, but I want you to see something. Right here, we have what? A consolidation. Right here. The high volume is right there. You can see it. Now, this moves very fast, so it's not going to be something. Let me draw you a little box around it. You'll kind of see what this is about. And then we're going to use this as a template, if you will, your understanding to move the ball forward in this narration. So chop, chop, chop is the same as this. Chop, 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 break. Test. You can't get back above here, going south of the border. Chop, chop, chop. Volume is in here. Break high. Now we can either come back and test it, but once we get over this, then these guys are on the hook. Notice where we come. These sellers show up right here. There's a selling iceberg. Here. Same crew that was over here. Bang. And what are we at now? This volume. Now, notice something different here. So, too low, no way to know, hindsight. Bullet train, a change in behavior. Where did you see aggression from the buyers? They're trying, but no. Bang, change. Okay, now where do we pull back? Here. And where is support? Here. So I pull back to here. Now I get VPOC migration. Now we're going to do some interesting things. Let me just get this. I'm going to do this. I'm going to label it, and then I have to go back up on top where it fell out of. And now you'll see something interesting. Here. Which I think, okay, I got it. All right. Now, you remember the early trade where the volume point of control was migrating down and we were using it. Well, here I see buying. There it is. Here I have resistance. Blow through it. I come back to the mid. Now there's a few possibilities. I mean, you think it's going to zero, you sell the mid. Me, not so much, because I already got my trade. So now I'm sitting here, and yes, Right here, I get VPOC migration. So right here, I know I have the following possibilities. If this is too high, I'm going to bounce off it and come potentially here. If I cross above it, that puts all the shorts on the hook because it's a change in behavior. So let's come back and look. This is the mean. This is called the variable high volume node. If I rotate outside, so this is support, this is retail, this is too high. Let's watch. What is this? Support. See it? Now what? Let's follow a little further. What is this? This is retail. What do we know? Too high. What do we know here? If I come outside and I hold this level, which no clue, I can then mean revert and come across. Then I can rotate back here and return. I can come out here and return. That's rotational trading. It's a context in a context. Now, right here, no way to know. Okay, I'm just sharing with you the auction. I do not have a long here. And there's only one reason. I'm too close to this. This is a structured trade that does not qualify in the Trader Lab. If this was further out here, so I had a level and I pulled outside and I thought potentially, and I'm not saying I would, but if it fit my plan, this out here, if that was out there, so this whole structure had more range, it would be a long to here for a scale. In the auction does not care about what we need for risk reward and all that, but the behavior is generic. So we would come out, come back up, potentially return, and it's rotational. Now, I'm just sharing this with you. Now we're going to move on. This is resistance, right? Why? It was too high. VPOC migration. Let's look. Where do we come? Let's look. There. Isn't that interesting? If I had a long here, I would scale here and I'd be targeting this. I've showed this trade, specific trade and structured trade in the stream before. It's a little more advanced, but I didn't have the range, so this trade didn't happen. So where's my next way to get in here? This is too high. Follow. Break high. This is a long for me. I got long here. What am I doing? If this is too low, you could take it to here. If it's not, if this is out here, you could take this to that. If this, and you could be done with the trade. If this is too high, then we can come back here. But we broke above this. And you do remember where the opening swing high was that you marked, right? Remember the opening swing high? What's above the opening swing high? Stops. So if this is resistance right there, then what do we call it? Resistance becomes support, which means long. I took a long here, so I had the shorts. This didn't qualify. Annoyed, but that's FOMO. Too bad, Tom. Suck it up. Wait for your next trade. Follow your plan. There it is. Now what? Let's look. Overnight mid for a scale. High probability statistic. You got to vet them for yourself. Next target is here. Here and here. So those are the targets. Now there's more. This. So I posted in Trader Lab. This right here, value area high, and this outside edge of a consolidation is the targets. Now it can do anything from here. My trade's done. There's more trades, but my trade's done. So I wanted to rip through this today. How many trades do you need to take? I'm asking. Now, this I haven't seen, but we can go into it. Now, I did post in TraderLab about this. Let's look at this. This is called mean reversion. This is tradable. I talked about this in TraderLab. I posted about it. I'm going to show it to you. Now, this is tradable if it's in your plan. Remember I talked to you just before about when we fell out below the developing volume point and control, it was called mean reversion. It had no range. So even though I have that trade in my plan, I personally did not take it. Doesn't mean you can't. I just do my thing. And I'm not saying my thing is the best. I'm just saying it's what works for me. And that's what you have to do if you want to be in the business of trading. You got to find what works for you. So let's start marking these. And all I'm taking is the consolidations, just saying, and I'm going to mark the high volume area. So I'm putting a little line. That's it. Every time you see that little node sticking out like here, that's high volume. What these are consolidations. And that's all this is right here. Chop, chop, chop. That's a consolidation. Break high. Too low. What about here? Chop, chop, chop. You can see the volume. Break high. Too low. Chop, chop, chop. Well, let me do these first. I want to get these here set up first. So this is support. This is support. And I'm really only concerned with as I'm going to the right. As other areas get knocked out, I'm really looking at the current auction. Let's look at this up here. Let's just look at what happens here. You're going to find this one interesting too, because this is a way of narration, if you will. I don't use indicators, so I have to kind of do this. I have to see what's actually happening between the participants. So I got buyers, sellers, buyers, sellers. What's happening to the buyers up here? They're getting absorbed. There's the selling iceberg. There's the buy stops, iceberg, iceberg. Now, I don't know. Look at so the buyers looking like we're going, wherever. What do I see? Change in behavior. Resistance now is at this high volume. So let's look at it. And outside here at 9:30, we have something called the IB stat, IB high. It's this here. It's the first hour's high. There's a high probability that we will take out either the first hour's high or low. Considering we already got our statistic on the low of the day, probability is we're going to take this out. It's over a 90% probability. Past performance, not indicative of future results. I got to, vet. So I got this as a high probability statistic. At 9:30, I take it out. Now, what that suggests is that we might go higher. So right here, and this is not here at the time, okay? Right here, I see my seller. Now, there's two possibilities here. One is something called the IB failure, which is go south of the border, or a IB continuation trade right here. So let's look. My support is here. I have microstructure here. If I want, I can use that as support. Let me just move some of this around. You can see the volume in here. What I do is I look at these things, these consolidations, and when you guys, we all think about, I'm not a breakout trader, but I understand what happens in a consolidation, and that's all a breakout is. It's nothing more than that. So if we understand them, maybe there's a way, if you know what it is an auction. It is, I'm not paying that, sellers are here, buyers are here. If I break above it, and let's look, now the trend is up. My buyers are here, and I have absorption here. Sellers, selling iceberg. I'm pushing through the sellers. I come up here, going to the moon. What happens here? More buyers, more stops. Now what? I'm looking for it to go higher. High volume, going higher. Break low, too high. Right here, there's a potential change. Where's my support? It's here. So I get a bounce. I pull back to the volume here. I get a bounce. Now watch. So if you're managing your trade, now we're only looking at longs, right? So if you're managing your trade, you're managing your trade here. If you got long here, your stop needs to be under here or under here. We come down here. Watch. Sellers are here. They got stops out under here. Under here. I wanted to show you the mean reversion. So I'm going to show you that. This is high volume. This is the IB. This is an outside edge, and it came down to here. No way to know this. This is resistance. This now is support. The support is against this right here. And I don't know if it's here, is it here? What I used when I'm with the order flow, I'm looking here and I'm waiting for a consolidation to get built. I see this over here. If I see the buyer here, I need the micro volume and I want to test. We went right through it. So let's watch. I'm now over here. I got my sellers. Right here, I think it's going to zero. I have no idea. But I do have one idea. Good statistical probability I'm going to get here. So far, it's only longs for me. This is an outside edge. Now, I don't know at the time. Let's look at it. So I have this. Too high, microstructure. Let's go to micro. Too high, seller. Test. There. Seller. This is too high. Test. Seller. Going wherever. No way to know. Little micro high volume here. Clueless. Watch. Break high. Volume. So maybe too low here. So I've got 38. This is high volume. This acts like mean reversion. What I'm doing is, you see this up here, this high volume. If I come outside, and now the ideal would be that it doesn't come under here, but it did. What are you going to do? Life in the fast lane. This is an intermediate time frame VPOC. It operates the same as that yellow line that's been bouncing around, but it's higher time frame, and it's not going to move. It's stationary. If I get above it, it can act as support. This also can act as support. I come down here, and I observe that, and I'm going, maybe I should add. Now, again, advanced, not a recommendation. What is too low? This. What is support? This. What is support in a higher time frame? This. Now, you're going to find this confusing because if you haven't seen it before, you're going to go, what is going on? Micro structure. Here, buyers. So I have outside here, support. Didn't know. See my buyers. This is resistance. Notice how the market behaves. That's resistance. I pull back. Micro structure against support, and these are my levels. This is my level and intermediate time frame. All I'm doing is trying to get in alignment. Notice where we're coming. I took a long here, and I posted in Trader Lab 38. I think it was 38 or 40 was the outside edge. Can't remember. Yeah, here. See, look where we come. Here, 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 here. This is called mean reversion. And the reason I did it, now I might take it here, but that's not really, that's more advanced. Let's assume you're following structured trades. This is VPOC migration. Well, if I break below it, I mean, it's either game over or mean reversion. This is a context or a trade plan inside of a plan, and it's outside in trading. So in Trader Lab, this is a long. In advanced processes, this is a long to here. But when this volume is the highest volume for the day right here, it suggests north of the border if we can get above it and stay there. So this is an add or a long. Your job is where you get in, you got to scale here because that's where the volume is, and then you're looking for it to extend. Let's watch it. Break, pullback. Is this now the new retail price? Is it too high? Are we going to rotate? No answer to that until I know. Next target, next target. Trade is done for me here. Done. That was the last trade I took. Missed all the fun with you guys. Any questions on the longs? This is the long side of it. Are you guys tracking? How are we doing in YouTube? You guys getting some out of this? By the way, if you're a Bookmap subscriber, you do need to authenticate your Bookmap subscription. And there is a link in the Bookmap Discord Trader Lab chat, and I will flash a little something on the screen here. It's like, you know, in the subway, they flash at you there, that kind of thing. There's exclusive webinars for subscribers. There's going to be also some exclusive narration potentially going to be coming to the Bookmap Discord Trader Lab chat. And you're going to be need to have been verified if you're a subscriber. And be sure if you want to visit the Bookmap Discord Trader Lab community that you use the link in the bottom of YouTube and verify your Discord. Very important thing. And that link is available in YouTube and is available in the Bookmap Discord Trader Lab. Take care of this today. I know we all want to do something else like trade, but put it in your notes to do it at the end of the day. So this is the target. Now I'm going to talk about shorts. Let me see if you have any questions. Please give a thumb up if you're visiting in YouTube. Let's watch. So nobody knows where the high of the day is. I found out that for me, I trade statistics. I'm not worried about it. I used to be. Now, here's the other option. Let's assume you have a runner to infinity because whatever, you know, then you would use these structures for trade management. So if it's going up, so the lower, so this structure here is too high. This one's too low. The outside edge is out here of this distribution. If you put a little box around this thing, you would see it. Let me show you. So you can break these down into anything you want. This is all I do. I mean, I do it mentally in the sense of I just look at it, and all I got to do is look at this. And I can look at this, but this is where the micro is. So I get down into as short a time frame, if you will, or fractal, where, and this is like Russian dolls, you know, Petrushka dolls. They fit inside each other. So when you guys are using your 1 minute, 5 minute, 15, you know, it's all the same. They're fitting inside each other. But the difference for me is I'm not using time. I'm using participant behavior because I know what it says. I see no buyers up here. I see no delta up here. I see one stop. I see selling icebergs. This says to me, warning Will Robinson moment, maybe. I mean, I got to keep track of it. That's all. Right here, I don't know. Where's my buyer? I don't know. I got my sellers. I got my iceberg. I only got one buy stop. Isn't that divergence? 255 buy stops, 170 buy stops. One. What's that? And here's the volume right there. Let's draw a little box around this thing. Why? It is a consolidation. If you don't use time, I think you get to see what's happening now. And we are in the what's happening now world. I break. Now, until I get the break, as far as I know, when we have a consolidation, we're going to break this way. Just like this. We broke this way. Too low. We broke this way. We broke that way. Change right there. Now, right back here, if I don't get above this, this, and this, take this whole thing out, then there's a problem. Trade management opportunity, if you're just strolling, sitting down and you're on cruise control, right? Got the top down, catching some rays, or too high. For me, it's an exit. I don't pick the high of anything. We have other traders that are much more adept at that than me. What do you see here? Watch. What do you see here? Watch. There's the icebergs, 400. So what do I have here? What is this? Now, it can be an exit. And when I see this and look at the selling and it's aggressive and it's at a location, let's open it up. Now, I don't pick the high of the day, so I'm not saying this would be my trade, but look, this is how order flow helps you. I already know my location. That's why the line is sitting here. I see my buyers. That's the delta going to the moon. I see the selling icebergs. I see the absorption. All this is Bookmap now, okay? And it's a suspect. I don't know. More selling icebergs. Absorption. The buyers are lifting, and they're being absorbed by these icebergs. Here's my volume. Watch. Here's my test. Where's my buyers now? I need to come. Now, these guys, why are we not going higher? You're asking. Why did they not go higher? Because they were absorbed. You see? Now, is that something you should do something with? I don't know. For me, I don't pick the high. It's not, I don't have as good skill for that. I trade the targets. I'm just saying, that's me. And you could go broke trying to pick the high of anything. Is this the high? Is that the high? Is this the high? Where's the high? Is that the high? I don't know. So I don't mess with that. I use trade management because I know I don't know. And what here's what we know. We don't know. It's random. We know that. And we know eventually we'll find the high of the day or the interim high of the day. That I can assure you we know. Where the high of the day will be, we'll only know that in hindsight. And sometimes we get lucky, and if we're following a trade plan, like at the overnight low, we do find the low of the day. But do we predict it? Absolutely not. Remember, our target was here, and the low was right under it. Does that mean I picked the low of the day? No, I'm just trading statistics to targets. And do I know where the high is for today? No. I'm trading to there and there. Those are my targets. Can it keep going? Yes. Can we squeeze out yesterday's high? Yes. Will we squeeze it out? Clueless, not important. Absolutely irrelevant to trading, in my opinion. If the structure sets it up where we go there, I'll be on it. If I have a structured trade for it. If we never get there, does it matter? Not to me. Because how many trades do I need a day that give me this range with a very managed amount of risk that is very manageable, usually around 3 points or less per contract? How many of these do you need? I've found, at least, and I'm only going to talk about me, dollars are made in getting the range, not in this tip stuff. A lot of retail traders gravitate to, quote, scalping. I'm not saying you can't. It is a specialty. And ultimately, unless you really have an edge with it, you're going to pay a huge overhead to do it. And so that means you've got to have a very high profitability. In other words, a high hit in order to be able to pay the fees, commissions, and net a profit. I'm not saying you can't do it. I'm going to say is I kind of like to just get the trade and use a structured trade plan. So if I can get 10, 15, 20 points when it's available, I trade a minimum 2 lot, or at least in the Trader Lab, we talk about a 2 lot. See this, here. So all these are possibilities. Or come back here. This is a possibility, It's all up to you. Now, I'm going to talk about this. No, let's just take this sequentially. If you have questions, post them. I'll try to get there. So this is a potential short if you're a Darth Vader, counter trend trader. Trends up at the moment. So where's the volume? Here, which would be, this is resistance. And now we break down. Where's the volume? Here. Let's just follow it. We come up here. Where's the volume? It's here. I break low. There's your consolidation. It's in here. Now, I'm not saying anybody should do anything. I'm just saying is you can track it. Now, when I'm seeing this happening, I'm certainly not getting along at the moment. What would I do? Well, I know the following. I got a swing here. I got a swing there. I got a swing here. I got all the longs. Market goes up to go down. Market goes down to go up. So I have a couple opportunities here. If I break low, now where am I? I'm inside of this. So this is inside of the IB. I have a couple of trades here. I can be looking here for potential long, back to here, or I can be doing nothing. This is also a Trader Lab trade, but this is again advanced. I'm going to show it to you. Remember what this is. Micro composite volume point of control. It's the same as this. This is the volume point of control. And this shifts around in the developing time frame. This is the retail price in our, right now, in the developing time frame. It's a magnet because the shoppers like doing business here at the moment. In the higher time frame, and this is more advanced, guys, if your head is starting to spin, don't worry about it. This is advanced. You will not, even in Trader Lab, you're not going to get this because it's too many pieces for most of us because you're thinking in multiple dimensions or time frames. And remember, Russian dolls, this is the big doll. And this is the microstructure, the fractals, the little doll. So I'm going inside of the higher time frames. This is the fair price in a higher time frame. If I come down to it, and I have previous support, these are from over there, and I see seller, 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 seller. I don't know anything. Keep going. What happens here? Change. What's it aligned with? This. Where's the retail price? Here. This could be, I'm not saying it is, a long to here. It's called mean reversion. And I'm using high volume in an intermediate time frame, which is retail. Think of it like retail. And this is the current retail price. So if this is too low at the moment, let's go back and check if this is too high. There's your scale. This is resistance. Remember, if it clears out, we come up to the other side. If I can't clear it, I'm not paying that. Then I can take this out and come underneath. So that's what I know. This is a structured trade. Let's look at it. Where's the outside edge? It's out here. What was too high? Right there. See it? So this, I'm in fractals again. When you see this kind of thing, this is a distribution, or as you guys think of them, consolidations. Well, I know if I find an outside edge, and there's no precision, this is like horseshoes and hand grenades, and I have a level, and I have a structure, and I get along, and I have a scale because I'm returning to the mean. This is outside in. Well, where's the outside up here? It's out here. Where's resistance? Up here. So I know this might only do this. Or I come out here and I keep going. I don't know. So, see? So this is called mean reversion. Outside in, and then your resistance is there. See it? And what else is here? I'm just going to give you a little more meat on the bone. You're in this consolidation. So this is a target or ahead. I always go ahead of them. This is a separate trade. This is just ping pong, see you later. Or ping pong, trail, going to the moon, falls out, you're out. And you got a scale and a few burgers at your favorite institution. Now what? We are now below this. This is now a short, it's called the IBF. This right here is a structured trade. So you had this. There's two ways to trade this. Let me give you an idea. There's long to here, to here, to here, going out here. There's also short from here or from here down. Either one. It's all subject to plan. So if you took the long, you're going for continuation. You are conscious of this outside edge, and you know, whatever happens, happens. When it fails and you come under this, it sets up a short off of here called the IBF, structured trade, right there. And your stop needs to be here. And then you pull it down. That's that. So this is the short. So where are we going with this? VWAP and mid. Why? Stops. Structured trade. How are we doing in Trader Lab? You guys take this? How are we doing in YouTube? How about a thumb up in YouTube, guys? By the way, remember, this stream is available exclusively to Bookmap Discord Trader Lab participants to reverse engineer. We all work on our stuff. You got to work on your stuff. Now, there's more. So we have the short. Now, how many of these trades do you think you need? Now, it's not up to me in the sense of the range of the market. I've been trading this process for a very long time. Total trading going on 45 years, but this process, I learned market profile, I think in 1986 from Peter Stottlemyre. He created it. I actually sat in a classroom with him. You can imagine. And I thought I landed, on Mars. I really did, because I'd never seen anything like that before. And if you guys have seen what a market profile is, it's made up of something called a TPO and their half-hour brackets, because we didn't have volume or anything. We didn't have domes. Nada. You wanted to place a trade, you pick up a phone, talk to your guy on the floor. You guys ever done that? So, this is the short. This is where you're going. Is this a trade that would work for you? In a two-lot configuration, the way this short would work is you'd be getting short right in here. Break, trigger, pull back here and here. All this is your short right here. Stop could be here or here. Your job on a two-lot is to get risk neutral. So whatever the distance from entry to failure is your scale. Now you bought your stop. Now it's trade management. Sellers, chop, 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 too high, break low, too high, see you later. Where are we going? VWAP, mid. Now the stops are out. Think like a retail trader. Don't act like one. Now, what are the possibilities? If we get our stops out, let's go back to structure. So I think this is a great trade. If I was not about the stream, I would have, well, for me, it doesn't matter about the long. This is a structured trade. This would be from here to here. 30, that's an 8-point trade. Like I say, how many of these do you need? If you have a plan, you're waiting for them. It's like waiting for a bus. So we come down, we take the stops out. Now here, microstructure. Clueless. Let's watch. And what's above me? This. What is that? Retail. What's this out here? Stops blown out. Thanks for playing. Write this down, by the way. The market goes up to go down. The market goes down to go up. If the market went up, what's under in that leg? Sell stops, the longs. If the market goes down and we get shorts, including us, except we trade the targets, up to you, or trade management, then in this leg, or the leg from the high, wherever we are, let's just say this leg, there's going to be buy stops. If I come outside and I get my stops out, now this is not going to necessarily be, quote, easy, because there's no easy in trading. By the way, I take stops every day, not so far today, but hey, none yesterday. And then I have days where I go, who's sitting here? Either I'm making errors or my plan and the auction are not in alignment. My job then, so you know, is to follow my plan. Because over time, I extract from the other participants in the market. Not necessarily the next trade, not necessarily the next 3 trades, not necessarily any trades. They're random. Casinos operate the same way. That's what this business is. Random distribution of outcomes in a structured environment. Random environment, structured trades is what I meant to say. So this right here, I see my sellers. Now, I see seller, I see buyer. Okay. 270 sell stops. Thanks for playing. This is when your broker sends you the coupon to the buffet at the casino. Now I have my buyers here. No, nothing. Buyer, volume. Buyers above this seller and buyers are here. This is the suspect. Notice what we do. So I'm looking at this and I have this and above. So basically, target is there and here. By the way, you do remember the short, right? Right? Well, what's above this swing right here? Stops. And then this. That's the retail price. And the way the auction works is it's always trying to figure out in all fractals and time frames, what's too high, what's too low, what's fair. Remember? Well, where's too low? Think of this like, if that's the retail price for an S&P, where does the price get too low? And now those who perceive this as a fair price go, I can't stand it. They put it on sale. I got to have an S&P. We don't know where that is, but we know if we find those guys, the buy stops are in this leg, so that's fuel to take it higher. And if we actually find buyers, we can come back and squeeze here and get here, and then go out the top or do nothing. That's not part of the joy. That's part of the maybe. So let's look. We know about this. We see buyers. If I get engaged anywhere in here, I got to have my stop out here. I just want you to know. So what do I see here? My resistance is here. I rotate down. Now, this has to be a trade you have vetted. If it is not a trade for you, you're just a tourist. And that's okay. If you're just taking structured trades in the Trader Lab, this is advanced. I don't have a location here. I have auction-based behavior. It's more nuanced, but let's look at it. So, too high, microstructure. Too high, I don't know. Too high, sellers. Oh my goodness, going to zero. What's happening here? I see a buyer absorbing here. Delta, buyer absorption. Lower. Buyer absorbs here. Icebergs. Stops. Okay. Buyer here, sellers are here. So I'm in chop. I know this is too low, maybe, and I don't know if we'll take it out. Part of the joy of trading, it's random, so can't predict anything. Buyers are here. So I have two-sided chop. Watch. Now, what do I know about this? Microstructure, too low. What's down here? Too low. I have two layers now of support here. This here is a potential long, and the goal on this one is to start coming back into these zones of resistance. Here, here, and up. And I'm going to try to go and squeeze and come back to retail. Let's just watch the behavior. Where are we coming? Remember where the volume was. So you could be, if you choose, I label these. This I'd label. This comes down. I'd be looking at, I always look at the most recent behavior. There's a buyer. That's a potential long. Remember, I'm getting risk neutral. My stop needs to be under here. I come down here. What is this? If I don't take this out and I see absorption here, I see my icebergs, chop, break high, test the volume there, it's another long if you're advanced in Trader Lab. Where's resistance? And where am I going? I'm going here, and I got a scale ahead of this thing. I always give it a couple of ticks, and I can't tell you how many times my teeth start chattering with this thing. Oh, there you go. So I'm going here. So this is called mean reversion. And this is mean. And there's a joke in Trader Lab. Yeah, mean. Like mean. It is. Because you're trying to find outside. This is what's hard. This is a context in a context. So potentially, and there is a conflict here, because we already hit our upside targets, which was this and this. So those were the exits for the longs. So now what? Well, the possibility is to go from here to there, to the yellow, and to take this out. So the long, you'd be risk neutral and you'd be hanging out. Or you're risk neutral, you're hanging out, you got, this is a target, and here's the following. Microstructure, break, and now you're looking to use this as a trade management tool and you just get out of it. Or you wait for it to fail. It's all up to you and your trade plan. I don't have any opinion on it. For me, if it misses, it misses. I just go with the flow. I kind of go for the broader stroke on this. So I'd be going for this because I can chop, but now here's how it changes. If I can't get back here and the market comes back down here and spends time, then this volume point of control will shift lower. But I need more volume here than I have up there. Just saying. Coca-Cola is asking me if I follow. Yeah, I follow every high volume location. So variable high volume nodes is the same as a micro composite variable high volume node. It was a retail price in that fractal. So MC VHVNs, same as VHVN, just intermediate time frame. Micro composite volume point of control, current highest retail price is balance in an intermediate time frame. So I can use it as a target coming up. And if I get through it, then I'm going to go to the opposite side. Let me give you guys something interesting. Let's just look at this a little bit. Now think Russian dolls. Let's assume here, we're going to make an assumption. Hopefully it's a good one. I just want to show you fractals here, how to think, or at least think in market, in auction. If this is too high, you notice it's an outside edge. And then I come down here, it's an outside edge. In here is the high volume in this fractal or time frame. That's retail. I'm not paying that. Yeah, but it's on sale. And we do this, and then if we fall out of it, we go someplace else. In the intermediate time frame, this microcomposite volume point of control is the same as that, but a higher time frame. Microcomposite low volume node, outside edge, is the same as that in the intermediate time frame. So this is equal to this. This is equal to that. Sorry, this is equal to that. This is equal to that. And that is also the same as that. Low volume nodes. Low volume, this. So in an intermediate time frame, it's the same. So when I'm trading in a developing daily time frame, I also have to be aware of where I am in the bigger picture. So this trade didn't get back here. This trade looks like it's going to the happy hunting ground. Hasn't yet, but it looks like it is. So that's just one trade. You know what I mean? That's just the way it is. Any questions, guys? This is trading in fractals, trading the auction, using high-tier order flow tool to see inside the behavior. I can't predict anything. I can tell what happened here. And if I can't get back, see where this came back? Look what it's aligned with. It's aligned with the outside edge of this fractal. So this is where I was trying to go, but I have a choice right here. If I can't get over this micro volume, which is right there, let me just click on this thing for you so you can kind of see it, which is this little fractal, which is created by this. This is how I keep track of the auction. I see my seller here. Now, at this point, I don't know. It could just do this and come up here. Well, it's not. Now, I can either bail out of it, or I'm just going to suffer through it. And then I come back here. I've got to clear this to get here. And what happens here? Volume, break, test, can't get there, can't get there, can't get there. Hit the plunger, the canopy blows off, and hopefully your parachute opens. Or you're back at support. I would not hold this trade, because I'm trying to get back here. If I can't, that tells me something, that maybe it's too high. And I won't know until hindsight. Now I'm back out here. Let's watch what happens right here. Microstructure. Let's watch. Now, I don't have a long here, but I am at an outside edge potentially. This could pull further outside. We're going to watch this. I don't call trades. By the way, reminder, I just got to give you guys a reminder. If you are a subscriber to Bookmap, you do need to verify your Bookmap email address through the verify link in the Bookmap Discord server in order to access special webinars and streaming. That's going to be exclusively for you as a subscriber. You will not be able to access these streams. And if I do any special streaming, which may happen in the Bookmap Discord server in the Trader Lab exclusively for Trader Lab participants, you will need to have verified if you're a subscriber in order to attend those special streams for subscribers. And there's more news coming on that. It'll be more clarified, but definitely take care of business, as they say. And there should be a link in the Bookmap Discord Trader Lab community. And I think there might be something out there in YouTube world that we're doing this. We need you guys to take care of this. So I know you've received emails about it if you are a subscriber, but I know we all have other things to do. But it's in order to make your experience better in the with the Bookmap education, etc. So always trying to move forward. So we all got to do a little to get more. Notice the structure. Now, this is not a trade recommendation. Let's observe location, structure, VWAP. Now, I can't say it's coming or going. Now, if the volume point of control shifts down here, this is going to put all the long ideas at the moment off the map. So, and what I'm hearing, I'm getting an alert right now that's saying the volume point of control may shift here soon. And if it does, then this becomes questionable. Remember how this works. What's a retail price? Well, if it gets overpriced, and now the shoppers, think of it like you're a shopper. If you go, I'm not paying this, you got to be crazy. And this leaves it, then it's saying is too high. So then, and we're going to see what happens. This is a potential long, right? But you got to be real careful with this one. This is like standing on a banana peel right here. I had my absorption. I have my absorption. I have my microstructure. I have a trigger, and not so much. I have no compulsion to trade. I'm talking only about me. I'm not here for dopamine in action. Oh, I click, boom, I could have sold this. If that's how you look at trading, that's not how casinos operate. They're not making games up for action. They only play games that have an edge. And they play them exactly the same way, and they do pay to gamblers. This is now VPOC migration. This is now the retail price. Very important what happens right here. Let's keep an eye on it. Now, what can happen from here, if you took a long out here, you're going, right? If you took that long and it missed that VPOC up there, it might be too high. If I get long here, now this has to push off of this. If I took a long here and this came down, this needs to stay above this. We'll watch it. This is not a trade recommendation. This is also advanced. And I'm going to tell you, I don't necessarily take this trade. I'm kind of like, I think, an artist, broad stroke. I find, here's something else. I find, and this is all individually, the amount of concentration this requires for me, as I become more fatigued, I am prone to make more errors. So typically my trading, I do trade in the afternoon, but I'm not interested in this kind of, like from here to where, I know where I might go is here. This is what I got in this. I'll show you what I got. I got a long, if I want it. I got a scale, and it would be VWAP. Then, if I don't reject this, then this is my target. The same as before, except I'm doing it as a variable high volume node, not as a VPOC. This is mean reversion, here to here. This is mean reversion. Here, and this drops down to here, then this drops, and right there, it's hit the eject button if it goes this way. Going this way, now we can come outside. And the problem is, this is now the mean. So we might only come out and then revert back this way. So you would need to manage this trade, but you're going for this. Why? Same reason we were going for it, from over here. Stops are sitting here, and this is the previous retail price. What does the auction tend to do? This is too low, what's too high? And by the way, it never has to come here. Too high could be anywhere because this is now the median. Remember how this worked. Where's too high? Well, it's up there. Where's too low? Over here. There's retail. What's this? Maybe too low. There's retail. If the retail's too low, we can go up and check where was too high. If this is too high, and remember, we don't have to get here. We do know there's stops here, and we know this is a target. That's all we know. This is not necessarily a trade I would take. It is an advanced trade. And when I'm talking about trades I would take, I'm talking about Trader Lab structured developing traders. I don't want you to get the idea every time you see this, you should do something. I want you to understand what's going on. And then what you're doing in this is only interacting with trades you have vetted. This is an advanced trade. You can learn this, but this is not, absolutely not where you start. Many traders don't understand what FOMO really is. FOMO is not doing the work and not building a platform or foundation of understanding. That's all FOMO. When learning to trade is one step at a time, you got to go slow and be intentional. You cannot be in a hurry. Recognize being in a hurry and skipping education is. It is FOMO. I want it now. FOMO. I see this. Maybe it'll work. If it's not vetted and you don't know why it might work, then you don't have a trade. If you're doing this, you're on your way out of business. I hope that doesn't sound insensitive. I've only been doing this 45 years. And I've seen, you know what I've seen. And I've seen good folks just like you. And they're no longer here. And they all do the same thing. They are captive to their emotional stimulus and wiring. The fear of missing out, revenge trading, urgency. I want it now. Give me the magic black box. Give me the holy grail. Give me that one indicator. And the influencers and the internet marketers make a fortune off retail traders because of their FOMO. Give me easy. Give me red light, green light. I'm going to suggest this is not easy. There is no red light, green light. But most traders are going down paths that don't have good outcomes because they don't understand this business. You need an understanding of the business in order then to put the pieces in place. And the understanding of the business is not about your indicators. It's an understanding of why the market does what it does, how it works, how you might get in alignment. And that's really what this is about, alignment, and then what might happen. And after that, that's all you got. Just remember how the casinos operate. What might happen. Hope you're getting something from this, by the way, and please give a thumb up if you're visiting in YouTube. And there's a link in the bottom of YouTube. Come over to the Bookmap Discord Trader Lab. There's 60 PDFs you can download of these structured trades I'm sharing here. You've probably seen these things before. I just flash them up here, and these show these trades I'm talking about. Now, these were done many, many years ago. I'm not a vendor. I don't charge for a course or any of that kind of thing. But you can download these. Plus, there's a library of webinars that you can take a look at and reverse engineer these. That's how this is built. And then there's the Trader Lab community. It's a community of like-minded traders with all different approaches and ideas that have come together to leverage their collective experience. This is a community effort. This is not about me at all. All I've done is shared what I've gleaned after a lot of pain and going down dead ends, getting excited, and then waking up and finding out I had nothing. I only had random behavior. I had no edge. I did a webinar on it called Trader Groundhog Day. And I did that because I started out, first of all, I started out when indicators were just becoming available. So when I shared an office with George Lane, he created stochastics. Imagine seeing stochastics or an oscillator for the first time, and going, oh my goodness, it crossed over. And look at that, it went up. And then you go from there. By the way, where's our target, right? We're trying for this, who knows, right? So advanced structure. This puts this on the table. And it does not have to get here. That's the thing. We have micro resistance there. See the high volume node? We've got it there. And the coup de grace would be getting here. So that's what you got. So if I was long, I managed to trade. I don't know. And then suppose I get taken out and it goes here. Am I going to abuse myself? And emotionally, I will have a response. Like, you shoulda, right? Have you had that thought? I shoulda stayed in. Here's how you answer the shoulda. You shoulda followed your trade plan. The outcome in the rotations are random. We cannot predict it. We don't know it. So if I'm trailing behind and I'm using this and I'm under here because the buyers are in control, then my stop is here. If it comes down here, I get taken out. My mind is going to go, you could have had this. Does that sound familiar? My discipline and my experience says, forget about it. That's just the lunatic that occupies your brain. Hide. Remember, Jekyll and Hyde. Hide. Fight or flight. That's it. So I'd be taken out here. Doesn't matter to me. Hide matters. It matters to hide. In our business, it does not matter. This is where it's to right here. So I could have my stop here. If my stop is here, but I didn't make a new high, you see? So my stop will be under here. If I'm on the other side and I see the seller here, then I know this is resistance right there. If I don't get over that and I see this, I could jettison here. All these things are things you need to determine. And then it's not how you feel about it. It's what you do exactly the same way. Remember, blackjack, 7 cards. They shuffle the deck a certain number of times. They cut the deck. They shuffle, they deal the cards. Cards coming out of the deck are random. Gamblers play the cards randomly. Casinos extract dollars from the gamblers, even though the gamblers walk out with cash. But they don't change the game. So it's not about, I think no. The only way you can measure something and know that you actually have a replicable edge is by consistent anchored inputs. I did a primer webinar on this. It's available to all of you in the Bookmap Discord Trader Lab, as well as a complete library of all of this. So you can and watch the primer webinar first. It gives you a high-level overview of this. It's only about an hour long. It's got over 30,000 views. I guess it's pretty popular. And you can kind of see what's going on. And then determine what you are doing. Are you waking up a trader Groundhog Day trying to curve fit? The thing is, and I didn't really understand this early on, you could throw a dart at the board or close your eyes or just flip a coin. And if it's heads, it's buy, or tails, you sell. And if you just did that, the coin toss, you would probably break even or even have a profit or a small loss with a coin toss. If you can do that with a coin toss, think about it. If you randomly push to buy or a sell and put just a 2-point stop behind it with a 2-point target, what are the probabilities of you getting to the target before the stop? It's not 50-50. It actually will be skewed probably to the upside. Now, there's another piece to this. Does that mean that's a trade you should be taking over a large sample size? If you isn't exactly the same, you cannot measure it. If you cannot measure it, it's random. We see random patterns. That's our brain is wired to see patterns, and there's patterns all over the place. And then we'll take a pattern, we'll slam indicators on it, and we put some more to make it more certain because of our risk aversion. We then are looking to predict what's going to happen, when in reality, we can't predict the next tick, let alone anything else. And then we curve fit and try to make it better. A couple more indicators, a couple more time frames, and then we think we got it. Then we put it into play with random inputs, not anchored inputs, and it breaks down. And even though we get some winners, it's a loser. Is that what's happening to you? That's Trader Groundhog Day. And there's good reasons for it. And we've all done it. The question becomes, are you going to keep doing what doesn't work? Are you going to keep trying to fix something that might be a process issue, not your effort or your intention? It might be process. And you can't make a process work that might be defective and you might not know it. If you visit the Trader Lab, you might be able to resolve some of those questions if you have them. Please give a thumb up in YouTube. Remember, this stream's available exclusively to the Bookmap Discord Trader Lab participants to reverse engineer, screenshot, circle arrow, plus the ongoing community in the Bookmap Discord Trader Lab is 24 hours, 7 days a week. Thanks for visiting Trader Lab. Please give a thumb up on the way out. There's a link in the bottom of YouTube also. If you want to visit the Bookmap Discord Trader Lab community, there's no cost for that. Just be sure to register and verify your email address. And remember, verify because starting soon, there's going to be exclusive content for Bookmap subscribers. And remember, you can always subscribe to Bookmap. There's a free digital version that you can subscribe to. You can go to bookmap.com, check it out. You can see all the subscription options, and but free, good. Mother said to me, free is good. Thanks again, guys. Please give a thumb up. Thanks for visiting the Trader Lab, guys, and I look forward to seeing you same time, same station, as they say, tomorrow.